I think we're in a non-essential bubble. Everything seems important, so of course nothing is. Greg McKeown. My friends, we can focus on what is important when we keep our focus on price movement, because that is all that matters in our world. And again, what is the most important helper for us to see what's actually going on with price? Well, it is the percentage version of the moving average convergence divergence indicator, and that is at the bottom of our screen. It is blue and red lines. It is the price percent oscillator and the exponential moving average line, the 8 period, which is our signal line. And of course, what is so important about that, when we have crossovers going up, they signify a change in investor sentiment. Almost always now, if you have a sideways slide of the market, again, a lagging indicator like the MACD, the price percent oscillator, which is a percentage version of that, starts losing its relevancy. That's why we like to tag the MACD up with a leading indicator like the triple smooth version of the relative strength index that you see with the derivative oscillator. And of course, what we like to see happen is the price percent oscillator and the derivative oscillator crossover at the same time. Typically, when the leading and the lagging cross at the same time, that is a good sign as to at least enough movement for us to capture a chunk of that and make a successful trade. Now, of course, let me jump. I don't usually do this, but we're going to start off with Bitcoin. Why do I start off with Bitcoin? Well, I start off with Bitcoin because the price percent oscillator crossed over going down on Bitcoin back on the Friday, the 26th of March. Bitcoin went ahead up 3 more weeks, and then the devolution started as Bitcoin is hammered down, 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 down again today. Not a lot, 0.94%. It was our only down chart for the day. But it showed us the weakening in Bitcoin. Even though it had 3 more weeks of up movement, that was Russian roulette in there. That continued pulling away of the price percent oscillator from the red signal line, and the derivative oscillator being negative showed us lots and lots of weakness there. And of course, a red line forming for the week so far, derivative oscillator gaining downward momentum. Price percent oscillator heading down, 2-day chart. We see that we did not reach a lower low these latest 2 days, which again, if you're looking for a good sign, okay, that's good. Problem is price percent oscillator, derivative oscillator gaining downward momentum. What about the half day? Again, you can see where the low was reached back on the 19th of May. That was last Wednesday. And then again, it popped up a little bit and then just devolved since then. Not going to a lower low yet. Price percent oscillators flat, derivative oscillators positive, but that's your smallest chart and the one that means the least. 2-day is important to us, and the weekly supremely important to us. So that's where we are on Bitcoin. Still, as I've been saying for several weeks now, lots and lots of downward pressure. Now let's leave Bitcoin, go to the S&P 500, up for the day 1.02%. We had a weekly vertical crossover this last week. Now, those of you who were watching, what was weak about that weekly vertical crossover? The fact that the derivative oscillator still quite positive. However, a good sign is price percent oscillators trying to still pull away from that red signal line. But as we just saw with Bitcoin, you can still have further up movement before everything finally breaks down. So we have a green open box candle pushing through I don't even like to even call that a trend line. It's no trend line to speak of. It's just the first week after a weekly vertical crossover going down. We look at the 2-day. What do we see there? Well, of course, it's been broken. And again, popped up above this latest 2-day candle. The 2-day trend line sitting right on it and just above the weekly. Price percent oscillator, however, is good. It's still negative. It is heading up a little bit, but still negative, as is the derivative oscillator, losing some downward momentum. So continue to keep your eye on the S&P if you decided to make some kind of jumping in. Of course, always, what do? Always have in effect your most important profit and loss bands that you obey. Now, what do we see on the half-day chart? We can see that, of course, it bottomed most recently back on Wednesday, the 19th of May, and it has been moving up since then. And this latest two-day candle, higher high, green candle moving up. And of course, why we have that candle down, why we have that trend line down, not good. We need to fix that. We have fixed that. There we go. So, whoa. Sorry. I'm like, how would I let a two-day go that long? Well, I didn't. It was the half-day. I saw the half-day here and then didn't see it on the half-day chart. So, again, folks, still not 100% up to speed after having that terrible bout last week. See if I can find that 4-hour, move it up a little bit, of pneumonia. So, again, things do take their toll on us. But, nonetheless, the show must go on. That is where we are. Now we've got that 4-hour trend line drawn right. That's where we are. So that's what we see going on with the charts when it comes to the S&P. Let's go to the Qs, 1.68%. Now again, the Qs crossed over going down back on the 7th of May. And again, that was on a Friday because we always have our crossovers on Fridays because that's when the candle ends. 2 strong weeks of down movement. This week starting off up some 1.68%. Price percent oscillator still heading down but losing some momentum. Derivative oscillator still gaining momentum. On the 2-day, we can see where we sort of reached that low last week and have sort of slid along that. And then this latest 2-day candle, green up candle, popping above the 2-day trend line. Price percent oscillator still negative, but heading up. Derivative oscillator negative, losing downward momentum. Half-day chart continuing to spike up, not quite hitting the weekly yet, but do keep a close eye on that. I know many of you have already taken your profits on that weekly vertical crossover going down on the Qs, and of course, obey your profit and loss bands. Take profits when they're appropriate, when they are available. How do you know when? That's what we call practice, my friends, the same way you get to Carnegie Hall. Now, let's go from the Qs to TLTO. By the way, all of you ordered books, I got all those orders from last week fulfilled. Thank you so much. You want to support the program? Buy our book, Charting Your Way to Wealth. We'll get a copy right out to you. Let's see what's going on with 20-year bonds. Of course, 20-year bonds crossed over, going up back on the 30th. That was April the 30th. And then what did they do consequently? Slung sideways and then down for 2 more weeks. And this week starting off a little up, 0.37. But that price percent oscillators continued to move up and pull away from the red signal line. Derivative oscillator stayed positive. And the 2-day is bouncing off the red signal line. Now again, I guess I'm hesitant to move it. I almost want to move it over there. Again, I know several of you were watching for that bounce off, which really started occurring back on, and you could even call it, and again, we didn't have a crossover going down, so again, calling a bounce off whenever you want to look at it. That's why I didn't redraw it, but it does give you some renewed hope for things moving up as far as 20-year bonds go. Now, of course, what do bonds usually do? They usually move conversely to stocks. When stocks go down, bonds go up, and we see everything up for the day. So we'll continue to wait, watch, see what's going on. Derivative oscillators still negative on that 2-day. Price percent oscillator's been positive since that crossover going up all the way back on the 29th of March. So let's go to the half-day chart. We can again see things tracking up. I can draw a little better trend line there. And again, several days of movement. We'll continue to watch and see how much more energy bonds gain and see if they do that at the expense of stocks at some point. If stocks just continue that reversal, or bonds going to take off. Don't know. Gold, however, up again. 0.18%. Has that not been beautiful? We waited for gold patiently. We had that weekly vertical crossover around the 166.59 mark, and the latest high, 177. So pretty. This week so far, not reaching a higher high than the prior week, but that price percent oscillator going up, derivative oscillator heading up today. Another nice 2-day candle, but again, not reaching a higher high there, but moving right up that trend line, well above the weekly. Derivative oscillator gaining upward momentum, price percent oscillator heading up. And on that half-day chart, we can see where things spiked back on the morning of the 19th of May, and then sort of, slid sideways, teetering back and forth. Little up in the morning, not as much in the afternoon. Today, that devolution there that we see is what sort of caused the MACD to lose some of its energy and move over, and, well, the price percent oscillator, the percentage version of the MACD, and the derivative oscillator also losing some of its energy. But that's the half-day chart. We'll continue to pay closest attention to the weekly and, of course, the 2-day, and they're still looking okay. That's where we are, folks, as we end the day. Again, thank you so much for dealing with me with my mental, it was mental too, but primarily medical, my pneumonia situation this last week. Haven't had that happen in all these years. I've complained before to you about some breathing issues, but wow, just out of the blue to get sick like that was very tough. But I'm back in fighting trim. God bless, my friends. Thank you so much for being with us. We appreciate you. We do all this for you. We appreciate our Patreon supporters who help pay for the bandwidth and the texting service and all those things. We appreciate all of you being with us. God bless. All the best from the whole team at Charting Wealth World Headquarters.